Hello guys, welcome to this episode. Now, in this episode, this is we are under series of finance stroke investment series. So we deemed it fit that we take you through understanding of Treasury Bill investment. And for those people who are not understanding what is a Treasury Bill, do you know what is a Treasury Bill? Okay, for those who are not understanding Treasury Bill, I did not mention my name. Of course, this is Efe Juma, and with me is
Joy.
So we're saying for those people who are not understanding Treasury Bill, we want to help you understand what is Treasury Bill, how can you invest in Treasury Bills, and how can you evaluate Treasury Bills so that you see, because it's very important when it comes to investment, you really need to do your valuation so that you compare between the opportunity cost and where you are going to settle. Because if you don't do valuation, how will you know whether it's a better opportunity or not a better opportunity for you? All right?
Yeah.
So please stick around as we go through this valuation. I hope you will really enjoy it. Okay?
Yeah.
Because this now takes an expert taking you through the valuations. Now, to begin with, I want to explain what is a Treasury Bill. So, Treasury Bill is one of the investment vehicles, right, that we have for short-term investment. Now, if you say an investment vehicle, is that I just mean that it's an instrument or a way or avenue that you can use to invest your money so that you get a return. Now, Treasury Bill is usually, we say that you are lending government for a short term, right? Yeah. So you are just lending a government for short term.
An individual,
okay. Yes. You can do it as an individual. You can do it also as an institutional. So for Treasury Bills, we have institutional investors and we also have retail investors. And so individual fall under retail investors, right? So I'm saying that it's just lending government for a short period. Now, how does the Treasury Bill works? Now, practically, for in the context of Kenya, we usually have threshold, right? We have threshold, like we have rules governing investment. For example, if you want to invest in Treasury Bill in Kenya, first of all, you have to register or create account. Okay, and now Treasury Bills in Kenya has been made easier, so you can create account. So through what we call, or you can invest through what we call, you can create account and invest through what we call DAO CDSC. DAO CDSC. So DAO CDSC is you can download that app.
Okay.
Then with that app, you can create your account. And when you're creating your account, what will be needed is maybe you can just note for them so they can see what will be needed. First of all, your KYC details. And if I say KYC, just know your client.
Okay.
Know your customer.
So KYC.
KYC. But I just want you to write the KYC. KYC. So under KYC, the things that you will need to have in place when you start creating that account, first of all, your identification document, either passport, or national ID.
Okay.
Right? Yes, because we have foreign investors and also we have local investors.
Yeah.
So you need to have your ID.
Yeah.
Then also you have a passport size photo, right? You need to have that. Write that down.
It's another. What's the difference?
This is ID, identification document.
Okay.
So I'm saying for identification document, you need to have either a national identity card or a passport. Another one is passport size photo, that small photo, right?
Yeah.
Then you will have, of course, you will have to choose your broker, because for you to have, you will have to choose your broker.
So
but those ones, no need of writing. Those ones will choose. So brokers usually, sometimes we use the investment banks.
Okay.
So when you go there, you will always find the broker, so you can choose the one you want.
Okay.
Yes. Of course, your bank details, those things, you will just have that form. You populate and you fill it. But now the documents that you will attach, I've said that is your ID, passport size photo, and Kenya Revenue Authority PIN. So your tax identification number or certificate.
Okay.
Right? Bank details and KRA PIN. Right, KRA PIN. In the context of Kenya, now in your country, For example, Uganda, we have URA PIN, Ugandan Revenue Authority, URA. Yes, so it depends with the context. And in US, they call it what? Tax identification number. Something like that. So those are the things that you can. And I've said that you can invest as an international or foreign investor and also local investor. So that's right.
Okay.
So once you've created your account, you will once you've submitted the application for creation of account, it will take a week or plus, and then you will receive your account number or details through email, right? So after that, you can start your investment. Now, the main topic of today is understanding the Treasury Bills valuation. So we are going to valuation. I was just taking you through how can you start the investment. But in case you need a step-by-step guidance on this, you can always call me or reach out to me so that I can help you create account and also give one-on-one advice on the same. So, of course, my number 0743 660 912. Write for them so that you can see.
Okay, 0743
660 912.
912.
So guys, this is my number. You can just WhatsApp, and if in the context of Treasury Bill, just text me Treasury with regard to Treasury Bill, just like that.
Yeah.
Okay, erase so that we start the evaluations. Now, I'm saying that the importance of doing valuation, it will help you to make the right decision, because sometimes an instrument, or you might have the difficulty of knowing whether should you invest or not invest, and what will inform that decision is after doing the valuation and know what you're expecting at the end of those payments. Now, I was explaining how Treasury Bill work. Now, I was saying that you actually you are lending government money, right? Yes, with the consideration of interest payment.
Yeah.
Now, Treasury Bill, what actually happens is that you pay, for example, if you want to invest 100,000, you will actually pay less than 100,000. Then when it matures, you will be repaid, the government will pay the full amount.
Okay.
Right? So that's what we're going to do here, the valuation, and see how it works. And another thing that is worth mentioning is that when it comes to Treasury Bill, we have 3 types of Treasury Bill. We have 91-day Treasury Bill. Then we have, that is 3 months, right? We have 91-day Treasury Bills. Then we also, that is the shortest possible. Then we have another one called 182 Treasury Bill. That is going for half a year, 6 months. Then we have 364 Treasury Bill. That is going for
a year.
Right? Good. So we want to get to how to do the valuation. And we are going to use an example, and we are also going to use a rate. Now, before I go to example, I want to look at the recent issued Treasury Bill and see what was the rate, so that we can do the valuation using a practical rate, right? So Treasury Bill is one of the investments that are considered risk-free. It's one of the considered risk-free, like risk-free investment. So let me just see, for example, the last Treasury Bill issued, what was the rate? Then we can use that rate in computation or in illustration purposes. Now, interest rate environment has been coming down in the context of Kenya. So current I have a Treasury Bill here. I have prospectus that was issued this dated 17th of March 2025. And in this treasury bill we have these particular rates. So first I want to start with the 91 day treasury bill. Sure. So just write 91 days treasury bill. Then put in bracket. I want you to just put in bracket here the interest rate that was issued at this particular. So because this was the result for this auction.
Okay.
So like once you've created an account, you will always go to the portal or to that app, then go to issues or the instruments that are being issued, or the instruments that are there for buying or investing that you can invest in. Then you can always choose. So for this one, this was the result for this issue or for the auction. So interest rate here was 8.918.
Right here.
Yes, just right there. We are going to use that in calculation. 8.9180%.
Okay.
So guys, you can remember that in some part of last year, Treasury bill was actually having better interest rate. It was actually above 10. It was around 14, sometimes could go up to 16. And this is an impact of inflation. So when you will find that when inflation is down, then it means that the risk has gone down. So you'll always see that when inflation is down, these rates will always be coming down. So when inflation is high, these rates will always be going on. So at that time, when the interest rate on Treasury bill, especially this 91 days Treasury bill, at that time you find that inflation was at 7 point something.
Okay.
So then the interest rate was reading around 16-17%. So it was really attractive then.
Yeah.
But I hope now you understand the impact of inflation. So here we because inflation in the month of February, we said that inflation was at 3.5. So that's the reason why you see the Treasury bills are really being given low interest rate. So this one can be interpreted like the investors are really having confidence in the government, that the government are not going to default the loans. So that's why you see the risk is lower. So when the risk is lower, you find that the returns also lower. So assume that you wanted to invest in this Treasury bill and this is the rate. What are you supposed to expect as an investor? So you need to know how to evaluate this and know what you're supposed to expect. So assume that you have how much should we use in this valuation?
Is 500,000.
500,000. You want us to use 500,000?
Yeah.
And see what you are going to get? Now there's something I've said. There's something I've said, and you really need to understand this. I'm saying this for Treasury bills. They usually pay. You pay less than the face value of that investment. Okay. So, for example, if you want to invest 500,000, you will find that the government will prompt you to pay less than 500,000. But when after the 91 days or after the 3 months, you will get the full face value. Okay. You will get the 500. So the difference is your return. You understand?
Yes.
So I want us to actually do that evaluation and see how it works, right? Now, our formula is this.
Yeah.
So write the formula there. So it is P is equals to 100. Directly confirm if you can see can you see from your end? Can you see? Yeah. Okay. So just to break down or to explain this formula. Now, this 100, we usually say that like when you are evaluating the treasury bill, we usually evaluate for every 100 of that particular investment. So even if you have 500,000, we're saying for every 100 of that 500,000. So we are going to see for every 100 of that amount that you are going to invest, how much are you going to pay the government, right? So what we'll do first of all, so that's we are getting the price at which you will buy that particular investment.
Okay.
Or how much are you going to pay government for every 100 of the total amount invested, right?
Okay.
So then this R is the rate. Okay, this R is the rate, and of course it is percent, so it is over 100. Then this D stands for the days to maturity, right? So what is the day to maturity? 91. And then this 65 is the assumption that that year is having 365
days.
So you understand?
Yeah.
So let's start with. So in our example, we are saying you said that we use 500,000. So you are investing 500,000. So we want to see then how much are you going to pay the government once they call for the payment, and after that, how much are you going to receive as total interest rate for the 3 months, right?
Yes.
So let's substitute. So our principal or amount that we want to invest is 500,000. So just don't write 500,000. We just want to break this one down. Okay. So just write P is equals to don't just ignore this.
Why?
I'll tell you why.
Okay.
Yes, because we are saying we want to discount this, okay, and see how much for every 100. For every 100, how much are you going to actually pay, right? So we have, just say 100 is equals to, so we are going to substitute this. 100. So is equals to, just write everything here. So where there's R, we'll put the rate, and yeah, something like that.
1. So here I put
8.9180 over 100, right?
Times 91.
Yes. So where there is D, we'll put 91, then 365. Yeah. So this is what we are going to do. So we'll start by, I want us to work out this one.
Yeah.
So we say this could be, so it means this one it's percentage, so we divide this by 100.
Yeah.
Oh, okay. Have your phone as a calculator maybe for that.
Okay, so
assist me with the calculator so that maybe it can help us do that bit fast. Assist me with the calculator. Sorry? Bring the calculator.
So this one divided by 100.
You get
0.08.
Okay, because if you break it down to many steps, the board will get full. So I should
just write everything.
No, just say what you have. Of course, this one is just take the decimal the other side. It's
0.08918.
0.8918.
I write down.
So okay, just write it there.
Okay.
So what is this one giving you?
So sorry.
So 91 divided by 365.
91
divided by 365.
Okay. It's gonna be 0.2. Should I write it to how many decimal places?
Okay, it would be better. Okay, write to 4. 4? Yes.
So 0.2493. Yeah.
Okay. Put in bracket, then plus that.
Yeah.
Then of course here we have this one. So, and the numerator we have 1. So just close that bracket and
okay.
You were just okay. So
yeah.
Put over 1, everything over 1.
Yeah.
Right. Yeah, so you can just proceed. You multiply this by this, then you add to this, then you divide by 1.
Yeah.
Okay, so let's do and see what are you getting. Let me also work it out. 8 point. Okay, so you're getting 0.9782, right?
Yeah, we're not rounding off.
You're no problem even if you round off.
Okay.
So what we are going to do, this one, remember we had something outside the bracket, so just maintain them.
Okay.
Remove this one, because if you do that, it's something else.
So yeah.
Yeah, so what we are going to do, you are going to multiply that. So just multiply that by 100.
Yeah.
Okay, what are you getting?
Times 100. 97.82.
So 97.282.
Yeah.
So what does this mean? It means for every 100 shillings, you're only going to pay what? 97.82.
Okay.
82 cents, right? So this is what we are going to use to calculate the amount payable to the government and interest income at the end of the 3 months, right? So what we are going to do after that is that we want to know how much are we going to pay actually to the government. So what you'll do, we have 500,000 that we want to invest. So just put 500,000 here. Will they see what they get confused?
Or should we turn? Okay.
Okay, just let's see if
500.
or just proceed. Just wrap this one.
Are they seeing? Okay. So
we are saying take 500,000 divide by 100, because we want to know how many hundreds are here.
So these two will cancel.
So you have
5,000.
5,000.
Yes.
So we have 5,000. So this 5,000 you multiply by this.
By 97?
Yes.
Times 5,000. Okay. I'm getting 489,100.
No decimal?
No.
Okay. So this is you are investing 500,000, but instead of sending government this 500, I've said that Treasury Bill, you are lending government money. So instead of sending government this 500,000, then you are supposed to pay 489. But there are some things that you have not included here, so we are not done. So first of all, what we'll do, you see, we have to include tax, right? So we want to know that how much, what is your interest. So you will take this one subtracted from this.
Okay.
So 500,000 less the discounted amount that you're supposed to pay.
Minus.
So that we get the interest. Then we multiply tax.
So 500,000.
Yes, just say 500,000
okay,
less
you get 10,900.
10,900. So 10,900. So this is the interest that you're going to get in the 3 months.
Okay.
Right? So this is the interest that you're going to get in 2 months. But because for any interest income attracts a withholding tax of 15%, right? So we are going to get we are going to get 15% of this.
Okay.
Get 15% of this. So that one will be 0.15 times this one. Just turn the other side.
Okay.
So that they can follow. But remember, take care not to rub the other side so that.
Yeah.
Director, is it okay? Okay, so
10.
We have 10.
900 times 15%.
Yes.
So
what are you looking for? Tax, right?
Tax payable.
Yes.
You're going to get. Yeah.
So you're getting
1,635.
Put comma here so that you can see. So this is the tax that you're going to pay to the government. And because Treasury Bill, when you're paying Treasury Bill, that tax must be inclusive, so that we know the actual amount that you're going to send to government. All right? So this is tax. Okay?
Yes.
So what we are going to do, what we're actually going to do is that for you to know how much exactly that you're going to give government. Okay, before we proceed, this is tax.
Okay.
This is tax. So say what is net interest that this guy is going to expect from the government. Net interest. Net interest would be equals to, of course you can just subtract this from this, or you can just say 0.85 times the gross income from all gross tax.
So
I mean gross interest income. You understand?
No.
I'm saying this is the tax.
Yes.
And this is the net income before tax.
Yeah.
I mean, this is the gross income before tax, right? So if you want to get net interest income, you can either subtract this from this, or you can just use percentage. Say, because we say that before we deduct tax, it is the old return is 100%.
Yes.
So we say tax is 15%. So if you subtract 15 from 100, you remain with 85. So again, you can just arrive directly to net interest by multiplying 0.85 times the gross income.
Okay.
Yes.
So
0.85
times the net income.
Yes. That would bring.
So 0.85 times 10,900 is equals to 9,265. 9,265.
So guys, this is so if based on that interest rate that we've used, so if you are investing 500,000, at the end of 3 months, this is the net interest income that you're going to receive from that particular Treasury Bill. Now, the next thing, how much are you going to send to government actually? Because even the tax is usually paid. We say the tax is usually paid. It's included in that amount that you send to government.
Okay.
Yes. So what you do for us to calculate how much are you going to send to government, we are going to add this tax to the discounted price that we had calculated. Turn the other side, I show you. So you see this value here, this one here, okay?
Yeah.
This discounted value. So this is the amount that you ought to have sent to government.
Yeah.
But because this one we have not factored in tax, so we have to add tax to this amount so that we get the actual amount that you are going to send to government. Okay?
Yes.
Because we said that the tax is usually you pay it. How do we upfront, right? You pay the tax upfront because I've said that this type of treasury bill, government will always give you
more.
They will give you you pay you pay a discounted amount, then you get the face value. Okay. And for say face value or par value is the amount that is recorded in that treasury bill, right? So if you are investing 500,000, then this is the face value.
Yes.
But the amount that you're going to send to government won't be this. You will send a discounted. So the difference between the actual price you paid and the face value is the interest.
Yes.
Right? So we are going to add the tax here. So turn the other side, not this one, then you turn the other side.
So our discounted price was 489,100. We add tax.
We add tax to it.
Okay. It's giving us sorry.
So right here, amount payable to government.
Amount payable to government.
Just say yeah, okay. It's okay. Payable to government would be equals to.
So
yes, add those ones.
We are getting 490,735. Yeah.
So guys, based on the interest rate that we provided, so this is the actual amount that government will government in the context of Kenya, the government through its agent, Central Bank of Kenya, will prompt you to pay this one. So when you pay this one, of course, the first value, the amount that you are investing is 500,000, but they will prompt you to pay 490,735. So the difference between this and the first value is your net interest income.
Okay.
So actually, even if you do, you will still find this figure. If you do this, if you say the amount that you are paying, this which is 500 less this one, you will arrive at this one. Can you try?
I have done it.
Is it true?
Yes.
So that's how we do it.
Okay.
Have you understood that?
I have.
So when you want to invest, even if you have that your 100,000, if you want to invest, and what you do, you check at the central bank portal or the DAO CDSC portal. If you're already registered for the your account is registered, write for them number here so that those people who are having they just remind them. Those people who might be having a problem with this, they can reach out to me so that they can help. Yeah, and not necessarily individual. Actually, I help even the circles and all. Yeah, to understand this, so they can reach out. So just write my number here as we continue explaining.
07
43660 912.
Okay.
So this is my call number or WhatsApp number. You can this so that I can guide you through the steps, and you can actually start your investments or treasury bills. So what I was saying, now there's something I really need to know. Now in the context of Kenya, the minimum amount that you can invest in treasury bill, it must be 100,000. You can't invest less than that.
Minimum.
The minimum is 100,000, and you cannot invest 150,000.
Why?
You're investing in the denomination of 100.
So I cannot also invest 250,
yes,
350?
Yes.
Okay.
So it must be 100. So if you want to invest more than 100, then the next will be
200.
If you want to invest more than 200, the next will be
300.
So we go in that denomination.
Okay.
Right? So if it is, so like 500 you can invest. And as per our calculation, so if you want to invest 500,000, this is according to that one, assuming that you are among the bidders in that particular issue, then this is and you wanted to invest 100,000. This is what the government through CBK would have prompted you to pay. Then at the end of the period, you will receive how much in your account?
500,000.
500,000. So what is the net interest? The difference between the amount you pay to the government
and the face value.
And the face value. And the face value is the actual amount that you
invested.
Do you have a question? Ask me questions now. We have done the evaluation.
For now, I'm okay.
You've gotten it well.
Yeah.
I believe our viewers have also understood this. It's very important actually. When you want to do an investment, ensure that you do the evaluation.
Yeah.
So you will always compare this with other investment vehicles. For example, if you have this, you can compare this with maybe investing in a money market fund. So you take the same amount, you do the valuation. If you would have put this money in money market fund for 3 months, how much would that money yield to you, right? So then you compare with this one. So if you find that the money market fund will give you higher return, then would you still invest here?
No.
You will go to
the
the one which is will giving you the higher returns.
Yes.
So that's how we do the valuation. You have to always ensure that you do the valuation so that you settle on the optimal the investment that give you the optimal return with the minimal risk. So we say that, but actually Treasury bill is usually considered one of the safest investment or risk-free investment. Why? Because government will not be dissolved. We are assuming that government will not dissolve, and the government will always pay or meet the obligations of paying these debts, right?
Okay.
They will always service the debts, right? So should we say that for now we've discussed how to value treasury bills, and how to go through the process of investing, right? So summarize.
Guys, I hope that you have learned, and you can use the formula to,
arrive at
the conclusion. Let me say that. And as he has said, if you have not gotten it correctly, this is the number as to which you can directly reach him, his WhatsApp number, and he'll help you.
So thank you. So we say that this is under the finance series, or investment series, right? And we are still emphasizing that we have how many series? 5 series. So we have finance series,
we have family
series,
friendship series,
faith series,
and
fitness series. So always follow us. Remember to like, share, and give us your comments. Actually, if we are really doing good things, you really need to compliment us. Or even if there is an area that you need us to also cover, feel free to share. We have, for example, for finance series and investment series, we have all the information that you need. That's what we are doing, so that if you have any queries, always feel free to reach out or compliment or comment. We take all comment positively. So thank you. See us in the next episode.
Bye.